Hi, I'm Maurice M. Glazer of Glazer Financial Network. Uh, we are going to be doing these tapes regularly and sending them out. I hope this will clear up some of the misconceptions that was based on the last taping that we did, because there is an amnesty program for foreign investors, people who have investments offshore, corporations, partnerships, uh, uh, investment accounts, cash accounts. And we did get some negative reports because people said, what is this all about? We don't invest overseas. I thought we should come back in and talk about myself and Glazer Financial. I've been an accountant for 50 years. I'm a tax and a forensic tax accounting specialist. I've spoken at many corporate and organizational meetings, and over the last 6 or 7 years, in addition to speaking at corporate and organization meetings, I have also done a lot of seminars for expatriates and visitors to Mexico, Belize, Costa Rica, Panama, Ecuador, etc., etc. We have written many, I have written many and published many articles and publications, been quoted, and I've appeared on television, and I'm a U.S. tax planner, an expert in pensions and asset protection, and I have extensive foreign tax experience. As a general, that's myself. Our firm is a full-service financial firm that really is all-encompassing. We do corporate partnership, estate, trust, individual. We do individual tax planning. We are very familiar with all of the required tax forms. Many accountants today just do not have the educational prowess or the desire to study and figure out exactly what needs to be done. I think there's, with the IRS coming out full force with hiring over 38,000 new agents to review things, I think that things are very, very critical. We used to get 4 or 5 IRS notices a month. Today we probably get 20 or 30. Their review process is getting better. Their computer process is getting better. We have about 3,000 clients, and we prepare about 2,500 tax returns. We administer 200 pension plans, and we have 30 employees in Dallas and 2 in San Antonio, and in our pension administration partnership in Illinois, we have 25 employees. Our general concept is a process. I believe that people walk into offices and pay for services that are way out of control before they even know what's going on. So there's no tax review. And the tax review they get, they usually have to pay a retainer. My thought process is that we need to give a free 3-year tax review, which we do, and then we do tax preparation, and we review whatever else is needed, and we have a heavy concentration on asset protection, estate, and income tax planning, and on foreign possibilities. We're very aware of the necessity to stay within the IRS tax code. We as tax preparers end up being responsible, just as you are, for preparing your tax return. Therefore, we have a very complete list of questions that we ask you, hoping that you're going to, if you're not aware of certain tax laws, that you'll say, gee, I have a foreign account, or gee, I have done bartering, or whatever it might be. We're in the planning business, and although we do financial planning, the real key to our overall existence is tax planning. Every one of our clients knows what their tax liability is before the end of the tax year. The IRS is coming out with new regulations starting in 2013, and that rule is going to force banks to withhold, not tax, withhold 30% on all monies going offshore. So that means if you don't go to a regulated bank, if you go directly to a developer or whatever, it's going to cost you cash 30% more. By doing planning, we can reduce the amount of withholding tax that's otherwise needed so that you're not out of pocket cash. This is not an additional tax. It's just the government is interested in making sure that money going offshore, one, where the money is being invested, so that when you do sell it, that they can make sure that they get the capital gains tax, and two, the fact that if you have money on the table, you're going to be a lot more conscientious of what you do and who you do business with. We're really big into asset protection and income and estate tax planning, and I have a considerable amount of experience using family limited partnerships. I have a lot of different conception of how to convert these family limited partnerships into a vehicle that helps with income and estate tax planning. In the state of Texas, Florida, and particularly also Nevada, those three states are primary states where we do these family limited partnerships, and with the idea that if someone sues you for whatever reason, it could be your teenage child who potentially is a risk when he's driving, and this should help you protect your assets. And even if you don't live in these states, although I think Texas and Florida and Nevada are ideal places to move to, and because of those reasons, you can still set up partnerships within those states to protect the assets. The way we handle the situation is we send out a document request form which asks you for 3 years tax returns. If you want to send us wills, if you want to send us trusts, if you want to set whatever you want to send us, we will review it at no charge. We turn around and we analyze the tax return, see if we find anything that we would do differently. We write a little report. We write an engagement letter saying, hey, if we do your returns, that we would be, happy to do them, and here is the cost. In that way, you're not in an open-ended situation. If by chance we run into things that create a larger fee bill, then we would of course call and explain that to you and get your approval before we'd proceed. With a lot of the things going on today, and anybody who has ever heard me speak knows, taxes and penalties and interest are the biggest cost that we have out there. And because of what I consider to be an issue with Congress and the executive branch of our government, those costs are going to go up, and we have to save every dollar we can. Taxes, penalties, and interest are our biggest cost. In the new amnesty bill, there's an additional penalty if you fail to disclose that you had an account offshore and didn't pay income tax on the interest, dividends, or capital gains. These are all very big issues. But people who don't go offshore also have planning issues. And even people with small amounts of money, offshore or onshore, or assets that they need to get rid of, whatever it might be, I think that the tax planning concept is really necessary.